everyone. Thank you, Bonita, for being here. I am going to wait for a few people to jump in. I see that we have a share. Awesome, awesome. Perfect. Let's go ahead and let everyone know that we are live so we could get this started. I am super excited. How about you, Bonita? How are you feeling?
I am super excited to be here. Thank you for inviting me.
Absolutely. Thank you for accepting. This is so important for people to be educated in financial literacy. And I think we are not having enough conversations. So this is really important that we put ourselves out there and we educate our community. So I am putting here,
You're
we
absolutely right.
are live. Awesome,
So I'll
awesome.
see this on.
Okay.
Hey,
So I have posted that we are live making.
I'm sorry, I was looking for your post.
You are fine. You are fine. Okay. Well, people can see this recorded. So I'm just going to go ahead and get started just to value your time and mine. And that way, as they jump in, we get to the nuts and bolts of our conversation today. Is that
Okay,
okay with you?
that's all right.
Awesome. Awesome.
Perfect.
Well, today, we are going to have a discussion on understanding why people don't safeguard their future and their financial future in their families. But before we jump in, I just want to go ahead and introduce ourselves so that you can know who's talking to you and just know a little bit about us. So my name is Glisette Torres. And I am a mother of two beautiful girls. I have a super supporting husband. I'm also an educator with a passion for financial literacy. I am also a financial consultant, and I help individuals, families, and business owners prepare and protect their financial future, the unexpected, so that they can live and leave a lasting legacy. And today I have the blessing to have with me my partner, my colleague, and business partner, Bonita. Bonita, can you just tell us a little bit about who you are? Who do you serve? Who do you help? And what do you do?
Okay, first I wanted to tell you thank you for inviting me to this most important event. For those who don't know me, my name is Bonita Wynn. A lot of you know me as a mortgage professional. I've been in the business for 40 plus years, but the past 2 years, I ventured into the insurance business. The reason why I did that is because I do have a license, I just never used it. I've been doing my practice with final expense, and now I'm moving on to help other people build generational wealth and protect your families. The reason why I got into this is because it is very important to protect your families so you don't leave them with financial debt and things like that. And now I am venturing to building wealth for your families.
Absolutely. Thank you, thank you, thank you. And this is crucial, right? We see it every day. We not only do we build wealth, but we have to protect what we have. We work so hard
Right.
for what we have and we have to protect it. And so I want to just jump right into our topic today, which is understanding why is it that people do not plan for their financial future. But before we do that, I want to maybe explain a little bit about what are we actually talking about when people don't plan for their financial future or for their finances. So Bonita, when you hear that, what does that mean to you? When you said you work in the mortgage, you've worked in the mortgage for 40 years and you're also a financial consultant. And so what does that mean that people protect their finances?
Usually, when people hear protect their finances, they're really thinking about retirement. They're not thinking about the death side of it, which is something that we're all going to do. So it's out of sight, out of mind. And they just don't realize that when a loved one passes, someone has to pick up that expense. And the way to do that is to have life insurance to protect you So your family won't have to have a GoFundMe page, go borrow money here and there, and things of that nature. And that is typically what people think about.
Absolutely.
So we are here to educate them on the different ways and how to do that.
Absolutely. And now that you mentioned retirement, I'm going to go ahead and piggyback off that. Many people plan for retirement with whatever their employee gives them. So they go to work and they have Social Security and
Correct.
they believe that's retirement. Or they get offered the opportunity to be able to participate in a 401k, but they really do not understand what does that all entail? What is their part in that? And who is the real owner of their 401k? And how does that work? So even if they decide to plan for retirement with what's given to them, right? We just automatically do it because it's what they offer us in our, I would say, hiring packet. We at the end,
Mm-hmm.
as individuals, probably are still not safe financially for retirement. Do you agree with that?
I do wholeheartedly agree with that. Typically on the 401k plan, you invest a portion of your salary. If you're lucky, your employer will match it. And then you choose how you want these funds to be invested, whether you're a risk taker, you are subject to volatility of the market going up and down. And typically on a 401k, there's no protection at all. So if the market goes down, you're losing money. So when we're talking about retirement, a lot of people don't realize, first of all, this is money that's deferred. A good way to explain it, a lot of people might understand, is with school loans. You get a school loan, it's deferred, you don't pay any interest, but what's happening, the interest is compounding. And it's the same thing that works on a 401k. When you pull it out, what people don't understand is Uncle Sam, the IRS, they are going to tax you on that money. So if you've been working for 20, 30, 40 years, and as a senior, the first thing that you're going to want to do is like, okay, my income is going down. Does that make sense? So you're
Mhm.
not making the same amount of money as before. So they want to have as much money as possible for when they really need it. And what happens when they pull this money out? Uncle Sam's like, okay, we let you have you sit this money in here for all these years. But they're going to say, okay, we've let you do this, but now you have to pay us a portion. And it could be, if you're a senior, devastating. Because if you've had, I'm just throwing out numbers here, 100,000, they're going to take 20-30% right off the back.
Mhm.
And then that's what you have left. So as a senior, you're like, wait a minute. I thought I had 100. Now I only have 70. And then on top of that, they're going to issue what they call a 1099 because that's still considered income. And when you file your taxes, you're taxed again. So that is the issues with the 401k.
Absolutely. Thank you for explaining that in such an easy way to understand, because what you're saying makes all the sense in the world. I didn't pay taxes, which is how they attract you to this 401k, right?
Mm-hmm.
It's like a hook. Oh, I'm going to be able to get this. You're going to contribute. You're going to give me a match, which means if I put $1, maybe you're giving me 80 cents, or you put $1 and you put $1. But then that
Mm-hmm.
sits there. It might grow or you might lose. And then you're saying they want their portion. And then I'm also going to be able to have to put it in my taxes when I'm in retirement. So I'm basically losing both ways, but I don't know that until I become a senior.
You're
Do you
losing.
agree that usually it's kind of like a surprise?
Yes, it is a big surprise. It's devastating. And a lot of people don't realize the 401k is really to help your employer. It helps them deferring their taxes for what they pay. So that was a big surprise to me. I don't know why I didn't know that, but it is.
It
It
is
is.
because
And it is devastating to seniors.
it is. It is very much so, because when you get to that age, your finances are not the same. You do not have the health
No,
or
they're
maybe
not.
the energy to go back into the workforce. And then you add to that
Right.
that my income is going down, right? Because I'm not making the same.
Hmm.
I did not plan when I was in my 20s,
Exactly.
30s, 40s. And now I think I have this
Exactly.
nest egg, right? Which is my 401k. And all of a sudden, I'm getting taxed on my 401k. I'm getting taxed on my
Hmm.
social security. I'm getting taxed on maybe if I have a
Exactly.
pension. So everything that comes in, I'm getting taxed. And I have no deductions because my children are adults. I probably have grandchildren.
Exactly.
And so, how do
You
I
have
manage?
nothing to write off.
Nope, there's no write-offs. And so this is one of the ways where we do not plan for our financial future that affects us directly. Now,
Hmm.
I want to go back to what you mentioned about, passing prematurely. You were mentioning something about, having some type of insurance for our mortgage. So can you
Hmm.
share a little bit about that?
So when you have a mortgage, as
Mhm.
we all know, you do have to have what they call homeowners insurance, and that's really supposed to protect the house against hazards, fire, theft, hurricanes, if you're living in that area, flood insurance. But when you also have a mortgage, the lender makes it mandatory that you get another type of insurance that you don't even realize what it's for. It's to protect the lender. So if you have a conventional loan and you put less than 20% down, I mean, if you have to get what they call private mortgage insurance, that is an extra
Mm.
monthly payment to your mortgage. And what
Mhm.
happens is if you default on your loan, and typically most people do not want to default on their loan. I mean, that is their home. They don't
Mhm.
want to do that. So it's typically two ways that happens. It's medical, something happened medically, or they can't work the same hours, or they can't work at all, or they've been laid off or whatever. So what do? So the mortgage insurance is there to help you. Another type of insurance that people have, if you get the government loans, the VA, the FHA, they have another type of insurance that's mandatory. You have to get it. There's
Absolutely.
no way around it. So they will give it to you, and again, it's there to protect the lender, not you. So as a homeowner, if you want to protect your assets, one way to do that is to get a type of term policy, which is for mortgage insurance. But what you have to do, you have to really think about what do you want to do. So, if you are a young married couple, you got kids, you got two income household, when one passes, you have to ask yourself, the remaining spouse, will I be able to take care of the mortgage? Still take care of my kids, still keep them in private school, blah, 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 without this income. That is what the mortgage insurance will provide. Um, you don't necessarily have to pay the mortgage off. You might want to sell that home. So you want to get enough insurance in place so you can make the monthly payment until the home is sold. So I typically recommend, at least 18 months until you can get that going. So this is just one way to protect your assets um, when you get into that situation.
Absolutely. And I love the way you say, what would happen if one spouse passes away? And so when we say
Exactly.
not protecting our financial future in our family, and you just mentioned, I have to purchase a home. And when I purchase a home, I have homeowners insurance. So you're protecting the
Mm-hmm.
structure of your home. Then you
Correct.
have an extra insurance to protect the lender that you're paying for it. And you do
Correct.
it willingly because you want the home, But then
Mm-hmm.
when you get offered protection for, mortgage protection or a life insurance to protect your
Mm-hmm.
life, you consider it, which is what we usually hear, right? And so when I say you, I'm speaking in general. When we talk to
Mm-hmm.
prospects and clients, and we're just trying to give them information, they consider life insurance an expense, which is one of the
An
reasons why they
expense.
do it. And so you're willing to protect the structure of your home. You're willing to protect your car. You're willing to protect the
Mm-hmm.
lender, and you're paying for the insurance so that the lender is protected. Some of us have
Won't lose any money.
some of us have
Exactly.
protection for our phones, and you don't protect your life.
Correct.
Your life is what's letting you work to actually
Exactly.
have the home, to have the car, to have the phone. And the younger you do it, the more,
Mm-hmm.
the cheaper it is. And you
The
mentioned,
cheaper, the cheaper it
absolutely,
is.
absolutely. And you mentioned what would happen if you pass away. There is a possibility of a premature death. We are not guaranteed tomorrow. And right now, if something were to happen to you or your spouse, can you take over all the financial expenses, paying the home, electricity, water, providing your children with the same lifestyle that they currently have for the amount of years they
That
have?
they're used to.
Yes. And so this is what mortgage
Right.
protection is. This is what life insurance is. It is protecting your life for the unexpected. We don't want to use it, but there is a guarantee that we
Exactly.
are going to pass away. We are all going to pass away. We want it to be when
Exactly.
we're elderly, right? But if so, I have a 10-year-old. If something were to happen to me, I want her to continue having the same life. I know that my husband needs my
Exactly.
my income. And so when we hear people say, well, that's too expensive, you pay insurance for your home, you pay insurance for your car, but paying coverage for your life is too expensive is something that for me it's really hard
Right.
until it hits you with someone close.
Exactly.
And so now you also did
Um,
mention something key, Bonita. Oh, go ahead.
there's one other thing I wanted to mention, and this is
Absolutely.
key. You don't necessarily have to die these days to access your life insurance policy.
You read my
They
mind. That's
have
what I
now
was
what
going
they
to ask you.
call living benefits. Living benefits. What that means, let's say, God forbid, as you get older, we're all going to have health concerns and you have a critical illness.
Mm-hmm.
And the doctor says you have X amount of months to live. Well, you're not working when you're critically ill. What do you do? What is that spouse or whoever's left? How do they take care of the bills? You can access your life insurance policy prior to death to help you with those expenses.
Yes, ma'am.
They also have living benefits if you don't have to be critically ill, you could become disabled for whatever reason. And you can tap into your policy to get a monthly payment,
Absolutely.
or you can use it for long-term care and things of that nature. So there's a lot of things that the new policies have now that maybe the older ones don't have, and that is key. That is key because, as I mentioned, you don't know what's going to happen to you tomorrow,
Nope.
and especially if you have a home, not just a home, whatever. You don't know what is going to happen. So better to have now than later, or to find out that you don't have these things. We hear all the time. I hear all the time about people who have had this and they've accessed this benefit and how it's a life saver. They might have had the policy in their 20s, but 20 years down the road, there it is. That's just like a tool that they got in their tool bag, their toolkit, whatever you want to call it. It's
Yep.
an asset. It's there
Yes, it
for
is.
when you need it.
Absolutely. Thank you for sharing that, because that's exactly what I was going to talk about. And so we have guaranteed that we're going to pass, and there is a
Right.
very large percentage of likelihood that we might have a critical illness. And
Mm-hmm.
if people are not aware, if you have a critical illness, let's say you have it in retirement, right? You retire,
Right.
which is common right now. People are living 15, 20 years after retirement, and you get a critical illness and you do not have one of these plans or policies to protect you. The companies, the homes, let's say you get put in a home, you get placed in a home, they're going
Mm-hmm.
to want to charge for their costs, right? The cost of living and getting the living
Exactly.
services in a nursing home. That's the word I was looking for. In a nursing home, you
Right.
have to pay for that. And if you have Medicare, pays to a certain extent, but they're going to use
Right.
your retirement, your pension,
Mm-hmm. Your
they're
assets
your
first.
social security, your assets. So they're going to use your assets first to pay for your care. And if
Exactly.
you have more than one home, you're probably going to have to sell that home so that you can pay for your health care. And
Exactly.
this can be all covered in the life insurance policy, a plan. So these
You're
plans now
100%.
cover life. They cover you in life. And so the lack of knowledge, probably of knowing this, is maybe one of the reasons why people don't even, they don't see it, as you mentioned, out of sight, out of mind. But these are
Mm-hmm.
one of the reasons why, having one of these policies in place is crucial, so that you don't have to touch your assets. That's why you
Exactly.
have this insurance. You have car insurance in case you get into an accident. Well, you have life insurance in case you get a critical or chronic illness. And if you pass
Mm-hmm.
away, that you leave your family a legacy, and you leave them financially protected in the
Exactly.
case of something were to happen. Now, a lot of people believe that, health, especially for our seniors. I want to dive in a little bit to our seniors, because I had a
Okay.
conversation yesterday with a lady who was 75 years young, and
Okay.
she has two boys, and she
Mm-hmm.
was, talking about wanting to get protection. She doesn't want to leave the debt of her funeral to her kids. She is currently, she has several health conditions and has some diagnosis pending, but she's in
Mm-hmm.
a position right now where she barely can afford it, or she believes she barely can afford it, and she thinks she's not going to qualify. So
Exactly.
what do you think we can do? Probably getting them early. Let's talk a little bit about that. And if so, that they're already at her age, what can we do for our seniors before becoming seniors, and if they're seniors and they did not plan?
Okay. So for our people before they become seniors, what we can do is they can sit down and talk to one of us. We are insurance brokers where we have access to A+ carriers that insure people for all sorts of things and not what you see on TV. Those are, I can't think of I'm trying to think of the word for it. It's just a one type of insurance. You either qualify or you don't, and it's really not what you want. So we are able to shop around with all these different types of conditions. The insurance companies, they will insure you. but you just have to you have to seek someone out, just be honest with them, and they will help you get the coverage that you need. So it is always better to get a policy when you're young, because you are young. They qualify you on age, gender,
Mhm.
and health.
Mhm.
So it's
Absolutely.
better to get it prior to you being sick, if you can. If you are a senior and you already know you have a medical condition and you're hearing all the noise from everyone, well, you can't get insurance because you have this or you have this, always seek an expert or a consultant like us, because we can go in and see exactly how we can help you. And that is the best thing that I could say, because my condition or what's happening to me is not the same thing as what's happening to you, Glissette. Or I guess what I'm trying to say, just because your neighbor B says this, that doesn't mean it's going to happen to you. And also, most people, they do not tell all the details. So you really don't know.
Mhm.
And if you had a mom like mine, ask the questions, because all they can do is say is no. So I ask the question because it might be a yes.
Yes.
And that's what I advise people to do, to still please seek out a consultant like one of us.
Absolutely. That is key. As she said, we shop for you. We work for you.
Hmm.
You pay us nothing. We consult for free.
Exactly.
We sit down. We find out what is your needs. As she said, neighbor B, let's say that B is Bob. If your neighbor Bob
Hmm.
tells you something, is that person licensed? Have they asked you specific questions about your situation to understand where you are and what are your financial needs and what are you trying to accomplish? Because that is what we do. And once we
Exactly.
have all your scenario, right? Everything, then we go to work and we figure out who has the best coverage for you, who will protect you with your current situation. If you wait too long, there might be some
Hmm.
restrictions, there might be some limitations in coverage, but
Right.
we can shop for you and find the best option. We're loyal to our clients, not to our
Exactly.
carriers. And so we will
Exactly.
find the best option for you. And don't wait. The more you wait, the more expensive it is, the more time that has passed. In her case, this client prospect I talked to yesterday, she was like, well, I'm going to wait to go to the doctor. And when you're 75, we want to get you protected as soon as possible. Because in the case of something happened to you,
It's
then who,
exactly.
yeah, then who is going to pay that bill? Because when your kids go to the funeral, they're going to say two things. I am so sorry for your loss. Who's financially responsible for this?
Exactly.
Those are the two things they're going to tell you. They're going to say they're sorry, but they need to get paid. And so you can leave that
Right.
in
And
place.
I'm so
You can leave that in place for them. Go ahead. Go ahead.
I'm so glad you mentioned that, because they will, I wouldn't say take advantage of you, but you're going to be in a state where you're grieving for your loved one, and someone's always in charge where they can't even grieve. Okay, but
Mhm.
they have all of this going after them, and they give you a book, and you have to start picking merchandise, and you're just going to pick whatever, and the costs are so high.
Mhm.
And that is a shock to a lot of people. So I'm so glad you mentioned that about the funeral home, because a lot of people, they don't realize what really happens when you go there.
No, they don't.
And everybody gets paid when you pass. Well, as far as burial, the funeral home gets paid. And typically when I hear that a funeral is taking 2 weeks down the road or whatever, it's usually one or two things. One, the good thing it could because they're trying to get family to come down there. But
Mm-hmm.
9 times out of 10, it's financial.
It is.
And if you can't pay for it right there, then the body has to be kept and then the morgue gets paid. So there's so many costs involved. And that's what we're here for. We're here to help you. And if you come to one of us, we actually care because we're going to do a financial needs analysis, like you said, Glisette. We're going to find out exactly what it is that you want to do, and then we'll go to work. And then we will find the best plan to help you and your family.
Absolutely.
That's what we do.
Yes, 100%.
For free.
For free. We do it for free because we're here to serve. We are here to serve. And
exactly.
As an educator, I constantly think about, why is this not discussed in our school system? Because this information should be
absolutely right
for everyone, so that you can make decisions based on knowledge, based on information. And it's easier to make a decision if you've heard it over and over again, because we're comfortable, right?
Mm-hmm.
And just making a decision without 100% sure, knowledge of what you're doing, which is why you come to us. Now, I do want to talk about one more topic that I hear constantly, and I don't know if you are in the same position as me, but I talk to people daily that they say, oh, I don't need that because I have it with my employer. That is one of the main reasons, that I hear, especially for young people in their 20s and 30s. Oh, I'm good. I'm covered. My employer has that for me. Have you heard that as well, Bonita?
I hear it all the time, and I've actually experienced it. So what happens if you're lucky enough to have an employer that gives you that benefit?
Mm-hmm.
It is a group policy, okay? So it's going to be cheaper because it's a group, and you don't own that policy. You don't own that policy at all. Your employer owns the policy. So
Okay.
what happens if, God forbid, you lose your job?
Mm-hmm.
For whatever reason, you were laid off or you had to quit, that policy does not go with you. You usually lose the policy. But however, there are some companies that will allow you to be portable. So what that means, you can take the policy with you, but it's not going to be the same policy that you have with your employer. So if you've been employed for 10 years, you started at age 20, okay, you lost your job at 30, it's portable. You're going to get a notification from that insurance company, and they're going to say, okay, we have to convert this from the group term. It's typically another term or another whole life, but the cost is based at the time that you did it. So it's going to be so much more expensive.
Absolutely.
And again, not only that, you don't own that policy. So you should always have something that you own on the side, because you never know what will happen on your job.
Absolutely.
So yeah, we do hear that a lot. And one other thing I wanted to point out, when you have an employer policy, it's typically not enough coverage.
No.
Right? So it's usually 2 times whatever your salary is, or if you're an hourly worker, they might give you 10,000. Okay. So is that really enough to help you and your family if something should happen? No, it is not. So you still need something else.
Absolutely.
To help your family in an event that you pass.
Absolutely. Absolutely. I 100% agree with you, because that's one of the reasons I lived that experience many times. I changed employers. Once because
Right.
they got laid off, another because I pursued a different career path. And both times I lost my insurance. And I thought before
Right.
having this knowledge that I was covered. Oh, I don't have to worry about that. I was covered. I remember my first policy when I bought my home. I was 19. I was blessed to buy my first home when I was 19. And I paid for maybe $150,000, like less than 20 bucks. Like right now, that's 2 Starbucks drinks.
Exactly.
Let's just be honest. And
Right.
it got to the point where I was like, you know what? I don't even need this. Oh, I'm so young. I don't have to worry about it. Well, when I decided to change career paths and I looked into something at now, you know, in my 30s, beginning 30s, consider myself super young. It was like 3 times the price. And of course, you know,
Exactly.
so many things change. Age changes, weight changes, a lot of things changes as we, you know, grow in age. And I looked back and I was like, I shouldn't have done that. But we don't know. And
We don't
again,
know what we don't know.
we don't know what we don't know. That's why we're here, right? That's why we're sharing this, and we invite
Exactly.
everyone that's watching to share it as well. Because again, anything that is tied to your employer is not yours. Your 401k
Yours.
is not yours. You're contributing to it, but it's not yours. It's tied to the employer. Your insurance, your life insurance policy is not yours. It is the employer's. You might have the benefit to transfer it, as Bonita mentioned, or you might not. And when you do, you're going to pay the cost for an individual, not a group. You're not in a group anymore. So you're going to pay for that. With health insurance, the same thing. That health insurance plan is not
the same thing.
yours. They give you 30 days. I think it's called, if I'm not mistaken, Cobra. And then from there, you either pay full price,
Yes,
plus 10% if the law has not changed, or you have no coverage. So anything that is tied to your employer, it's not yours. So you should find something that is
it's not yours.
Yes, absolutely. Something that is yours.
That you can control.
That it's all yours. Right now,
you're absolutely right.
We can help you with retirement, and it's completely yours. You control how much you put in, when you access it. You don't need permission from human resources and from everyone above you. You don't need to give an explanation on it. You have living benefits, what we talked about, and it's completely yours. You change jobs, it goes with you. It has nothing to do with your employer. We can help you with your life insurance, where you're protecting your home. Because right now you're protected in a case of a hurricane, a tornado, but if you pass away, who's going to continue to pay for it? So your life is the most important thing, and we can help you with that. So that way your spouse doesn't have to pay, your children have still a roof over their head, and you're probably at a young age where you're not paying much. It's a few dollars a day. If you like going to Starbucks or eating out, it's probably less than that for a meal for one person. And it's yours. It's based on your needs. The same with
we can help you find the money too. We can help you find the money if you think it's expensive. I tell people, or I ask people to look at their receipts for the month. Like you said, you've been to Starbucks or here and there. You'd be surprised how much you spend. You cut one Starbucks and what dinner a week? Boom, there's your money for your life insurance.
Absolutely, absolutely. Now that you say that, another thing we help with, and we didn't mention it in this call, but we can have, if you're interested, you can put it in the comments below and we can set up a different Zoom meeting for this. But we also help you find the money so that you can become your own bank. Instead of having to pay interest to the
Exactly.
main banks. You control your money and you bank on your money, and we can help you with that. So I hope that with this, we've opened up a little bit your mind and giving you some perspective.
Mhm.
Before we conclude, this was so good. We've been 40 minutes in.
I
Bonita,
know.
is there anything else that you would like to share before we close this up?
Um, the only thing I would like to share is that for everybody to just sit down and think about what it is that they need, reach out to an agent that actually cares. We're
Absolutely.
here. And let us help you. We're going to listen to you.
Yeah.
We might ask you some questions just to get you to talk about what it is. Um, don't be afraid. A lot of times within touch on this, a lot of people are just afraid to
Mm-hmm.
tell what's really happening in their life, or what it is. Don't be afraid because we're all in the same boat.
I agree.
I'm in the same boat as you. So reach out to us, and that's really it.
Awesome. Thank you. Thank you.
Do you have
Thank you.
anything else?
I'm going to go ahead
Thank
and
you so much.
no, thank you. I'm going to piggyback off what she said, and then
Mhm.
we're going to close this up. So she says, don't be afraid because we're here to help. So
Mhm.
I have an analogy, and this helps me kind of explain it to my clients or prospects when we talk. When you go to the doctor, you're not afraid to tell your doctor what's going on because you need your doctor to be able to take care of you and your health. So you're going to let your doctor know everything. It hurts here, it hurts there, this, that, this happened to me last week, a month ago, a year
Mhm.
ago, whatever it is, so that your doctor has a real clear picture of what is your current health situation. This is what Bonita and I do. We are
Right.
money doctors. We want to understand where you are today. What are your finances?
Mhm.
What is going on with you? What do you want to accomplish? And so we're going to ask questions, but everything we ask is to understand your situation. Sometimes we uncover things that you didn't even think of because that's why we are licensed
Exactly.
and professionals in this area. We talk to you, we have a conversation, a consultation, just the way when you go to your doctor to have a consultation about your health, you're coming with us to have a consultation about your finances. And we are going to
Exactly.
be able to help you in any way we can. We're going to sit down and have these conversations. So thank you so much for this time. If you were
You're
tuning in,
welcome.
I'm going to just go ahead and real quickly look at the chat. So I have Reginald. He was clapping for us. Deborah says hello. Heather's like,
Oh,
I love this. What an amazing topic tonight. Some Glisette, hello. And I believe I shared in the screen another comment from Heather. So many great points about the importance of getting prepared for your financial future, for your future, making these critical decisions sooner rather than later. Absolutely, we talked about that.
then later.
Yes, the more we wait, the more expensive it is. And then Unique is like amazing information, good, breaking it down, amazing ladies from Sharnetta and Deborah again. Thank you, ladies. We want to thank you guys for tuning in. And we have a big ask. Share this with your friends, with your family, post it on your feed so that more people can get educated. Bonita and I are here to help. She's going to be
Here,
sharing
here.
her business card, her digital business card. If you want to reach out to her,
Mhm.
go ahead. If you want to reach out to me, we're available. We just want to be able to help and serve you in any way we can. All right.
All righty.
Okay. Have a great night.
Well,
Thank
thank
you,
you so much. Have a great night. Thank you, Glissette. Thank you, everyone.
Thank you. It was such a
Bye
pleasure.
bye.
Thank you for being my co-host. Bye bye.
Likewise. Talk to you soon. Bye
Yes.
bye.